Hello, I'm Jeppe Kirk Bonde, the most copied investor on eToro. More than 20,000 investors automatically copy my stock portfolio. Whenever I make a trade, these 20,000 investors automatically make the same trade. Since 2013, I've delivered 20% average annual return on investments. I've received quite a few questions about the current state of the economy and the near-term outlook. Investors and most people are concerned with inflation, warfare, and recession. Now, there are two keys to understand here. The first is the extent to which these issues are being addressed. The second is the extent to which these factors drive stock valuations. Now, inflation has been much too high, including 41% for energy. At the start of this year, the money supply started contracting though, after having grown by more than 5% per year for several years. Now, that's driven by the Federal Reserve finally reversing direction, reducing the balance sheet along with the interest rate increases and announcements of more to come. Now, that impact the balance sheets of commercial banks. If you look at how the market is trading inflation-protected bonds, you can see that you can effectively lock in an inflation of 2.5% for the next 10 years. Now, that's of course higher than the stated goal of 2%, but it's also far from the double-digit percentage rates we've seen in the past year. So overall, it's manageable, and I think the level of fear expressed in the media is slightly overblown. According to the old definition, we are in a recession, and I think it's only a matter of time before we are in a recession according to the new definition as well. And yeah, it could potentially be a medium-sized recession. The base case is that unemployment will be higher, growth lower, many companies in the world and in my portfolio will have lower cash flows, lower growth, lower profit margins. But prices for stocks are also lower. So if you own a company, that company might create less value in the near term, but also cost less. For many high growth companies, 80% or more of the value can sometimes rest in cash flows that will be delivered more than 20 years from now. So for example, if you buy a beach house, you own that beach house and you can enjoy it every summer for 100 years. But if, however, you find out that the next 2 years are gonna have bad summers full of rain, it doesn't mean the beach house is suddenly worthless. It just means that, 2 extra of these 100 summers are not gonna be good, and so the value of the beach house is lower, but only by a certain amount, not by the total amount. A famous race driver once said that you cannot overtake 15 cars in sunny weather, but you can when it's raining. Companies must be resilient to survive a recession, and if they're really lucky, do so while a competitor doesn't. For some companies, rivals can get in so much trouble that they can be acquired cheaply. There was a great analysis done by one of the world's top management consulting firms some years ago about how a significant share of the most valuable companies in history got there partly by brutally out-investing rivals through a recession. So a recent example of that is Amazon. From 2000 to 2002, during the dot-com crash, Amazon's share price dropped by 90%. But the business metrics kept growing, performance kept improving, and while Amazon continued to invest, many other e-commerce startups went bankrupt, and Walmart and many other contenders decided to hold back. Other startups couldn't get capital, and that left Amazon alone for the recession years to really expand their business relatively uncontested. And that gave them the extra lead that they needed to secure their long-term success. Now, if you'd been an Amazon shareholder since the IPO, should you then evaluate the dot-com period as a negative or an overall positive? Probably a positive in terms of the total shareholder value created from it through the whole time. For a company like Meta, this is now key as well. They have a strong positive cash flow, strong balance sheet, strong core business, and a recession may be exactly what's needed to keep poorer companies like Snapchat, earlier stage growth firms like ByteDance, etc. at bay, and to turn many new accelerating rivals in the virtual reality market. That might secure them the long-term dominance that'll really help them down the line to capture a grand share of this high potential market. Fear of recession is a short-term way to lose money. Embrace of volatility, willingness to take risk and invest through a recession is a way to win long-term.